Hi everybody, Russell Markham here. As the new financial year rolls through, so we're now into the new financial year, beginning of course on 1 July 2020. Let's reflect back on what some of the top performers took place. What were the top performers that took place over the last financial period. Now to do this, so if you've been asking this week, how do you do that in VectorVest? Here's a great technique. So I'm going to go into Unisearch, and you've all got this group over here entitled High-Low Search of Stocks. I'm going to click on this one to open it up, and I'm going to go down over here. So let's go down, and I want to click on this one here, 52-week price high over here. Okay, so I'll click on the 52-week high. So find me stocks that are hitting a new high over the last 52 weeks, so over the last year. And I'm setting the date to being the 30th of June 2020, the last day in our financial calendar year prior to the new rollover. All right, so I'm going to go back 52 weeks to work out what were the top performers over the last 52 weeks, over the last financial period. So over here where it notes new high, so you've got it straight away. Price split adjusted, new high over 52 weeks. I'm going to click on the 52 weeks, and I'm just going to say daily close 52 weeks. Okay, so daily close 52 weeks. That's it. It's a little change we're going to make. 30 June 2020, run the search. Here you go. Here are some of the best performing stocks. These stocks over the last 52 weeks are hitting new highs, which tells me that they are some of the best performing stocks in Australia for that financial calendar period. Now, to prove it, what we're going to do here is I'm going to go and quick test all. Now, I've set my fine here to being 25. Let's set it to being 100. You can quick test up to 100, a maximum of 100. So I'm going to set it to being 100 over here. So here the top 100. And what I'm going to do now is I'm going to quick test all. So click on quick test all. And now the date you want to set. All right, if you're going back historically in time, so you're going to go back in time to 2019, the first day of the financial period for the last financial year there was 1 July through until 30 June 2020. There we go. So 1 July 2019 to 30 June 2020. I'll push on OK, and I'll run the test. There we go. And now if I click on percentage price change, look at that. Here are some phenomenal returns here, 1,150%, 1,031%, 600, 457, phenomenal returns coming through here. But notice something over here. Here's one where it's, 0.7 was the end price, so it's still below $1. That's still below $1. That's a very small stock in regards to its share price, 0.042, 4.2 cents. Would you be comfortable buying a 4-cent share, let alone a beginning price of 0.006? So I think it's fair to say that for a lot of these figures over here, good in hindsight, but in theory, would you really have wanted to go and buy, 0.006 of a dollar that's now gone up to 0.021, 2 cents? Chances are you probably never would have bought it. So with that said, let's close this out and let's put in an additional parameter here. So I'm going to click on parameter, stocks, and price volume, price split adjusted, greater than or equal to, right now, in terms of that date there, it would have to be over $1. Okay, so I'll rerun the search. Let's quick test all again and fire it up. So 30 June. Now we've got to change this, of course, back 2019. Here we are. So we're going to come into 1 July 2019 to 30 June 2020. All right, so there we are. That's the last financial calendar period there. There we are, and click Run Test. Now, you can see that all the end prices here were at least $1. And if I look over here, apart from one or two where they began at penny stocks and ended up being higher prices, you can see that this certainly stacks up a lot more here where you felt comfortable, at least, buying in. All right, so let's grab the first couple here, and what I'll do here is I'll remove the ones where it was a penny stock to begin with. All right, so I'll just jot them down. The one we can remove here is MMM, all right, because that was a penny stock to begin with. So was MAU, all right, and so was CMM, and so too was RBL, okay, and I'll take it up to EOL for this exercise, all right, so no further than EOL. All right, I'll close out of here. I'm going to highlight these through here, through to EOL. So you see what I've done there, clicked on the first one, scroll down to EOL, hold my shift key, then click on EOL, so you've highlighted them all. Right click anywhere and now click add to watch list. Okay, now what I'm going to do here is I'm going to click on my watch lists and I want to add it into here. So I've highlighted my watch lists and I'm now going to click on the drop down, a new watch list here. Let's give it a name, so I'll call it 2019-2020 best performers, for argument's sake. All right, so I'll click add, give it a name that you prefer, but that's the one I'll give it in this exercise here. I'll click on OK and on OK again. Now I'm going to go back to viewers here, and here they all are. Now, as noted, I'm going to remove the ones where it was a penny stock to begin with. Okay, so the one I've got there on my list, MMM, also had MAU, and I had CMM. There we go, CMM. I'm just holding my control key as I press down. That then highlights them in RBL. So I'll just take those ones out. So it's fair to say that all of these at the start of the financial calendar period there being 1 July, right? So 1 July 2019. The other way you could have done it, of course, you could have set your date to being back to 1 July 2019 and then just removing anything that was a penny stock to begin with. But you can see at the start of 1 July 2019, none of these were penny stocks, right? And let's just double test this again. We'll quick test all. We'll run it from 1 July 2019 to 30 June 2020. Yep, there are those spectacular returns. Okay, so you can see some very good performers there. Now, the question is, how could we have identified those? What would have been some of the common characteristics? So we've got some of those top performers. Now, for those of you keeping an eye on your emails, you might have seen some of the marketing material going out. We certainly spoke about Fisher & Paykel several months back, saying it was one of our top performing stocks. Okay, but let's have a look down the bottom here. Let's right click, view watch list average graph. I'll fire this up. And this is interesting now because what I'm going to do here, and I'll just change the layout to begin with to being a VectorVest layout. All right, so we've got this layout here, and I'll put on EPS and I'll remove everything else, and I'll make this an area graph. Okay, so the date that I want to go back to is the start of the financial period for 2019, so 1 July. So coming into 1 July, there we are, 1 July 2019. Okay, so I'll just zoom it in a bit over here. 1 July 2019. Look what was starting to happen here on the earnings. The earnings had sort of rock bottomed, and they were now starting to explode to the upside. And this is interesting on this analysis here, because when I looked at it over here, I went, I probably wouldn't want to have bought into any of those companies leading up to this because they'd been sort of hit on the earnings, but the earnings were bouncing off. So it's just interesting from this perspective, looking at it. If you can identify some of those companies that have sort of come off rock bottom and the earnings are starting to explode to the upside. So it's just interesting to see, look at how the earnings are now turned the corner and off they go. The earnings are racing away. Put on the technicals. Technicals were firing away. There's Corona, a bit of a pullback, a bit more than that, a bit of a correction there. But the earnings were powering on and up go the technicals. Whoosh, up goes the portfolio again, and this is really telling here. Look at the technicals broke above 1 and the earnings continue to power on. So once again, earnings are a key indicator for picking your top performing companies. Make sure that your earnings are performing really well. But just from this analysis, to find stocks that were not penny stocks to begin with at the start of the 2019-2020 financial calendar year, what was interesting on this exercise is that the earnings had actually taken a bit of a hit and now we're starting to race back up. Bit of a bottom fishing type strategy there. So let's add parameter here, capital appreciation, and put in our comfort index. Powerful technical indicator, this one here. And you can see it was interesting with the CI. If you go back to 1 July 2019, so I'll just pull this back to 1 July. There we are, just about on. There we go. And zoom in a bit. You can see the CI was starting to come off from below 1 up above 1. It breaks above 1. I'll just make this an area graph to jump out just a bit more here. And it starts to race up. The earnings start turning around. Technicals start firing up. Bit of a pullback there. CI breaks above 1 again. Technicals get going. Earnings start firing up. And away it goes again. So even if you'd come in here and considered these stocks where you start to see the CI breaking above 1 and the technicals and the earnings starting to fire up again, it's interesting to see that had you considered around about here, for example, 11 May, right, so let's go to 11 May of this year. So back through to 20, April, May, there we go, and test all those stocks. Those returns 27% since May, just a couple of days worth there. All right, so very, very interesting to see those parameters in play. It should be no surprises, of course, to those of you that do this analysis each and every day. This is exactly what we teach here at VectorVest. Find those companies growing their earnings. Find those companies with solid rising technicals. Find those companies where the CI score is breaking above 1, powering up. So for the next financial year, you know what you are looking for. You're looking for those companies with consistent growing earnings as of this point in time. But what's interesting is, will history repeat? Will it be those companies that had a big pullback in their earnings and now the earnings have turned around and starting to rocket back up? So the last thing I'll leave you with here, well, sure, you can find companies, where the earnings had sort of fallen away. And now this is a worry-free winners watch list. I'm not going to share all the trade secrets on this because this is a great watch list that we're going to share with you at the up-and-coming SMSF Wealth Creator. It's for those that are coming along to the SMSF Wealth Creator course. You still got time to register. Make sure you get in at the special price before 11 July. But for myself personally, well, I'd just rather be hanging on to a group of stocks that consistently grow their earnings year in and year out, because we know that there's a strong correlation, of course, between rising earnings, rising share price. It's as clear as day. You can see it here on the graph. And you might say, well, I'll wait for a pullback and then the turnaround, but you don't necessarily know that that's going to continue to power on. I'd rather buy into something that's just consistently making more and more money each and every year on average. This is a group of stocks. It's not just a one stock. And sure, there's setbacks. There was a setback there, but we know on average, as long as those earnings continue to power on, you watch those share prices collectively per that portfolio on average power on. Rising earnings, rising share prices. So for 2020, for the next financial calendar period coming up, build yourself a watch list where you've got a collective set of stocks where the earnings on average are continuing to power on. Because, if we come back in a previous financial year and said, there it is, it's doing that, there it is, it's doing that, there it is, it's doing that, there it is, it's doing that. Look, it continues to power on. And that's how you make money. You're buying into companies that are consistently growing their earnings year in and year out. Okay, I hope you got a lot out of this presentation, and speak again next week. Bye for now.